To me, you know, gold and precious metals have always been, for me and for our investors, you know, that hedge against crisis. And man, do we have a doozy on our hands right now?
Now, finally, we have a situation gold bugs are waiting, or were waiting for the last 20 years. I mean, in my view, in our view, I would say the stage is set for phenomenal years coming for precious metals.
It's interesting, I really just wrote an article for our blog here this week, and when I was writing that article, I mean, just to show you what's happened, when I was writing that article a few days ago, gold was just over $1,800 an ounce. And today, as we're doing this interview, it's I think we hit a high of 1862 so far.
We have a situation that due to COVID-19, some of the mines have been, couldn't produce anymore. They had to stop the production. So we have an increasing demand, and that will continue for the next years. And we have right now at least some supply issues. And as you know, the business of mining, I mean, you can't start mining from one day to the other. And because this business was such a poor business for the last 10 years, actually, since 2011 when we have reached highs, there was very little money going into the mining business. So in order to increase the demand, it will take years. So we have the perfect situation for higher precious metals prices.
I mean, if we take a look at that chart, and especially in regards to commodities and oil with the negative territory that they're in, I mean, it's just truly a sign of a weak global economy. I mean, the Chinese aren't buying, you know, nothing is going on in the world economy. We're basically stagnant, we're at a standstill. You know, there's a lot of things that we have to see what are going to come eventually, but the fact that gold is performing like it is right now versus other commodities, I mean, let's face it, it's a completely different asset class.
I mean, of course, it's gold a commodity. It's mined like copper, it's mined like zinc, but gold is the only commodity which is 100% money historically, and none of the other commodities has this feature. So this is why gold is quite often excluded from the commodity sector, and truthfully so, rightfully so, because it's money. Yeah, one of the reasons why gold is doing quite well, often in crisis times, is that gold is a byproduct of many other base metals. And if you're in a recession, if you have hard economic times, then usually the production of these metals will be reduced, and this means that the supply of physical gold is also reduced.
We did this blog post back in May about inflationary or deflationary forces. I think at that point, when we wrote that, it was clear that we were in a deflationary situation. But what I think is really interesting, especially like literally today as we're writing this, things are changing. I think you know, the fact that we're starting to see central governments bypass the central banks, you know, injecting into the system. I mean, and you know what else I think is really interesting is, you know, even several months ago, nobody was talking about inflation, but now everybody's talking about inflationary forces, you know, so that's also changed. And you know what, that's only going to support gold, you know, for the long term.